Hi everybody, and I hope you're doing very well. Welcome to the latest NAGA market update. It's Thursday the 25th of February, and what I wanted to talk about with you today is actually the stock market volatility that we've seen increase over the past couple of days, specifically the losses in risk assets. Now, I do think that once the world gets more optimistic that the vaccine rollouts and that everyday economies and everyday lives will be able to get back to normal, we should expect continued volatility in world financial markets. However, the everyday life will not be getting back as fast as what we would all like it to be. If we look at the United Kingdom as this one example, where there's over 15 million vaccinations that have now been provided, it still will not be a reopened economy until at least the end of June by the Prime Minister's current plan. And I think when you take a look at other central banks and when you take a look at other economies and their own vaccine rollouts, we're likely looking at similar, if not worse or better timescales. So I don't think the world economy will be getting back as soon as perhaps what investors would like it to be. And that's why I think that central banks and governments, and when it comes to stimulus, will still say that, look, the long-term challenges from this pandemic, whether that's employment or getting consumers confident to spend again or any other economic issue and challenge that's come, will not be fixed anywhere near as fast as perhaps we want it to be. We all know the global financial crisis of 2007, 2008, we were talking about that for up to 10 years later. I hope that when it comes to the pandemic, we will not be talking about the economic impact for such a long duration of time. But nonetheless, these challenges where, in the US, for example, over 10 million people are still, without a job against 1 year ago, economic challenges will remain. And ultimately, that means that governments and central banks will keep stimulus levels very high and accommodative to help economies, and that generally is a good thing over the longer term and positive for price when it comes to stock market appetite. So I do not think that the recent sell-off is a correction in play, but I just think that on certain days we will see volatility, whether that's buying stocks or buying risk assets or selling risk assets. It's just going to be part of the ongoing rotation trade that we're likely to see take place even more common over the coming weeks and months. Thank you very much for watching this video. Please let me know in your comments whether you think that the recent stock market volatility was the start of maybe a serious correction, or whether it was just a simple rotation day. Again, please smash a like on this video, and also do not forget to subscribe to NAGA's social media channels for latest news, analysis and updates, and I will see you again tomorrow. Thank you.